Intro. Intro. Good evening, everybody. As we are coming in, please let's mute our mic and let's disable our video. Apologies once again for commencing the class late. So we are going to start very, very soon now. So we don't have much time. So please let's mute our mic and let's disable our videos, our video picture.
That's nice.
For
Salam alaikum, sir.
corporate reporting. Wa alaikum salam.
Okay. So I want to confirm if we have started the recording. Okay.
No, I've started.
Okay. So I'm like, okay. What about the streaming too? Should streaming or not?
The live, there's no time. Share your screen and start.
Okay. Okay, so I'm sharing my screen now. Can people see my screen? So can you see my Excel?
Yes.
Yes, sir.
Okay, sir. Okay, thank you. So I'm going to share the question we are solving. I'll share it into the group now. Although I'm going to display it here too. So, but I want to share it into the group also so that we can start. So just like I said last week, that we are going to start our group account class this week. Our calculation aspects. Just if you can remember, I told you people coming from skill, you should all take note that the group account you did in skill level was just an introductory part. The group account you are taking on now is a complex group account. So please let's take note of that. However, to the way group account is solved, there are so many ways group account is solved in depending on who is your tutor, but actually there are so many easy ways to solve group accounts, and that was the reason why I wanted to solve a question, a normal group account question. According to my plan, we suppose we ought to start for fellow subsidiary today. Fellow subsidiary. However, if we start fellow subsidiary, I know the approach I use, which is an easy approach to solve group account question, I know so many people are going to get it wrong. And that's the reason why I plan to solve a normal group account question this week. Then I will send you some questions, some past questions you can try on your own. Then by next week, we start fellow subsidiary. We move from fellow subsidiary, we move to sub-subsidiary, we move to piecemeal acquisition, then we move to foreign subsidiary before going to P or L. So that's the plan. That's the plan. God willing. So I've sent the question to your group now. So I'm also going to display it here so that we can all we are going to be looking at the question here too. So I don't know if those questions have dropped. I think it is dropping. It is dropping in your group. Sorry. I want to quickly display the question. My network tonight is oh shit. How can I display this question? This question have not dropped yet. Oh, time is going. Don't have time. Oh, the question is not here. Where can I see this question? Okay, I'm not using my phone. I'm using this laptop. Oh, the network. I don't understand.
So I see the question in the WhatsApp group. There's question there.
Can you see
So
the
there's a
question in
question
your
on the
WhatsApp?
WhatsApp group.
Yes.
The question is on the WhatsApp group.
Yes, sir.
Yes.
Okay. So let me pick it up there. Sorry. Let me pick it up. My internet is very slow. I don't know. Okay.
The question there is not a complete question. It's
Yes,
additional information.
Hello? I can't hear what you
Yes.
said.
Is that a complete question or additional information?
I dropped two questions, 2 pages. So that's a complete question.
The 2 pages are there. Check one.
Yes. Have you seen it? Maybe the
Yes.
next.
Yes,
Okay.
the 2 pages are there on group 4.
Okay. I've seen the 2 pages.
I think it's your network. Network is
I've seen the 2 pages. Yeah,
okay.
I've seen it as well.
Okay. Oh, the network. I can't see the question here. My WhatsApp is still loading chat. So the question is not my laptop. Oh, the time is going. Time is going.
Sir, can I make a suggestion?
Okay. Go on.
In order not to waste time for us to meet up, why don't one of us just read the question line by line? Then, as you're listening to it, you can, direct us from there. That's my suggestion, sir.
Okay. Yes. It's a good question. It's a good suggestion. So, I also have the question here. I think we can read the question together. Pending the time my WhatsApp chat is still loading. So pending the time is going to come up. So I think let's read the question together. So, the question goes by. Let's follow it together. Food PLC has a subsidiary, EBA Limited. The statement of financial position of the company as at 30th September 20 s um 20, September 30, 2020 are presented below. So they give us the financial statement of Food PLC and EBA Limited. All figures assumed to be correct. So now let's move to the additional information. Now, additional information one. They told us that Food acquired 480 million shares in EBA Limited 2 years ago, when the balances in the retained earnings and general reserve were 60,000 and 48,000 respectively. So, additional information to the fair value of the NCI in EBA as at the date of acquisition was 158 million. Then they also told us that during the year, goods costing 80 million to Food PLC were transferred to EBA. It is the good policy to transfer the good at a cost plus of 25%. A quarter of these goods has been sold by EBA at the end of the year. Then additional information 4, part of the bill receivable has been discounted. 5, the sum of 8 million transferred by EBA to Food PLC as part of the indebtedness was received after the accounting year. Then they also told us that an impairment test revealed a loss of 16 million naira on the goodwill arising on acquisition of EBA. Also, the carrying amount of net asset of EBA is 20 million more than the fair value as at acquisition. This is due to the loss in value of the company machinery occasioned by change in technology. The machinery is depreciated at a flat rate of 15%. So, nominal value of the ordinary shares are denominated in 50 kobo per share for Food PLC, while those of EBA. So this is a typical question. So this question to burst your bubble, this is a skill level question. Please let's be careful. This is a skill level question. Please don't expect this question in final level. Please don't expect this type of question in final level. In final level, your question is very complex. Please, let's take notes. So let's take notes. So now we are going to solve this question. Now, and how are we going to go about it? It is very, very simple. Please, are you guys still seeing my screen? Please, kindly react if you can still see my screen.
Yes.
Okay.
Yes,
Now,
you can see.
Yes, sir.
okay. So now this is how we are going to go about it. there is an approach in which I was taught. That approach is the best when you are talking group account. So who is me? Who is not me? Mr. Aliyu, please unmute yourself. Thank you, sir. Then John too, please unmute yourself. Thank you, sir. So someone is saying he can't see my screen. I'm sorry. I think that's your network. People can still see my screen. So I think that's your network. So the parent company is Food PLC, while the subsidiary is EBA. So because they told us in the additional information that Food acquired 4.8 million shares, 480 million shares, yes, 2 years ago. Also, when we go to our balance sheet, we are going to see that it is only parent that have cost of investment. So the first thing we are going to do is they told us to read the requirement. They told us to prepare the consolidated statement of financial position of Food Group as at September. Let me short it because of time. We don't have much time. September 30th, 2020. So if we go back to our balance sheet, our question is denominated in our currency. Sorry, our currency is denominated in our currency is denominated in naira. Let me see. Yes, in naira. And let's hang our 1,000, just like as you did. So this is the approach. Please, let's take note. This is the approach. The approach is very, very simple. If you remember the rule I said last week, that for you to understand group accounts, you must let's create our notes here. Let's create our notes here. Let's create our notes here. So then let's create our let's do it like this. Okay. I think we are fine like this. For the people streaming on YouTube, let me enlarge this so that they can see my screen. I think it's fine like this. Let me increase this. Yes. So now let's start. Now, the first approach is that, and for you to solve any group account question, please let's do it like this. This approach is very, very fast, and I'm very sure you are going to get a high mark in ICANN for your group account class. So can you assist me with the elements in the financial statement? Someone should just assist me. The assets. I'm sorry, I came.
Assets,
Yes. Yes.
Liabilities, sir.
non-current assets,
Yes, we have non-current assets.
assets.
Non-current assets. How much is
Non-current assets.
okay. How much is non-current asset for parents and for subsidiary?
556,000 naira and 256,000 naira.
And 258,000.
6,000. 58.
Okay. Mm,
It's 536, not like that.
yes. Sorry. Oh shit. Okay. Don't worry. Sorry. Apologies. Okay. Let me insert. Okay. I think I can use here. Okay. So my note can be small. Then I can enlarge this. Huh? Yes. You can go ahead. It. Yes.
That's 794,000.
Just leave this one like this. And this approach, I want you to use it like
Okay,
that
sir.
now. Just leave it like this. Don't write anything yet. Now let's move to the next. What's the
Yes,
next
sir.
one now? Investments, right?
Investments, yes.
Investments in subsidiary. Let me short it. How much is it?
220 for
220,000.
Just leave it. Then how
Yes.
much is the subsidiary? Subsidiary has nil, Abi.
Yes.
Yes.
Just call it. Just put it zero. Just leave it like that. Then
Yes.
when there is a line, Abi. Let's leave line. Let's leave line.
Yes.
What's the next item?
Current
assets.
assets.
Okay. Current assets. Okay. What's the first item for current assets?
Inventories.
Inventories. Okay. How much is inventory?
88,500.
You see,
Plus-
it's because I'm doing it for the first time. Everybody, please. For you to do this cannot take you more than 5 minutes in the exam. This is the
Yes, sir.
approach of group accounts. You know, I said it last week that for you to tackle group accounts, you must understand the principle. And the principle, when I told you guys last week, is that the principle is that assets of the parent and the subsidiary must be merged together. Can you see that we are merging them together? Assets of the parent plus subsidiary, we are merging them together. So, and we are following the principle now. And in your notes, in your exam, this is what you are going to do. Now, and this, if you can do this thing like this, even though the time is up in the exam, you are going to earn a lot of mark. There are some free marks you are going to earn in the exam. And that is the reason why this approach is very, very recommended. So you can't spend more than 10 minutes in the exam. You are just going to empty all these items in your balance sheet. So trade and other receivable, how much is it?
75,400 plus 69,800
71,400 plus
plus 69,800.
Okay. Then the next one.
Bills
Bills
receivable.
Okay.
Bills.
Okay. Bill receivable.
Receivable.
Okay. How much?
30,000 naira.
30,000 naira. Okay. Just leave it. Just leave it like that. Plus subsidiary. Subsidiary is zero, Abi. Just leave
Zero.
it.
Yes.
Then the next one
Cash and bank.
is cash and bank. Okay. How much is it?
25,600
25,600
plus
plus
32,200.
2,200. Then the next one is
Due from a
due
limited.
from EBA Limited. So due from EBA Limited is 20,000 plus zero. Now, okay. Now there is something I forgot. And please, okay, when we are doing our foreign subsidiary, that's when work starts. Because those are the questions that can be tested in ICANN. We'll do foreign subsidiary next week by the grace of God. So immediately, according to IFRS 10, immediately after your non-current assets, the next item that should show in your consolidated statement of financial position is your goodwill. The next item is your goodwill. And this goodwill, it will be shown in your working note 3. It will be shown in your working note 3. Just put it like this. Goodwill, working note 3. Just leave it like that. So immediately after your non-current asset, in all your questions, goodwill should follow. Goodwill should follow. Please, let's take notes. I just quickly remember now. So now, after due from EBA, then we have total. So in your note, you can leave one line, total assets. We have total assets and total assets. Okay. Let's do it like this. So we are done with assets. According to IFRS 10, the rule of consolidation is that the parents and subsidiaries assets must be merged together. We have merged them together. Now we are moving to equity, right? Yes, we are moving to equity section. So we are moving to equity and liabilities. Okay. So under the equity and liability, we have ordinary shares. Ordinary shares. Please, let's put it here like this. Parent only. That's the rule. It is only the liability and assets that will be merged together. Please, let's take note. Let me do it like this so that we are not going to. Let me leave a space here and let me leave a space here again. Let me call this equity. So ordinary shares will be parent only. Parent only. Let's take note. Ordinary shares will be parent only. So what's the ordinary shares of parent only? Ordinary share capital of parent.
400,000.
200,000, right?
400.
400. Okay. 400,000. So what about the subsidiary company? What about the subsidiary company? 150,000.
150,000.
Yes. Okay. Remember that the standard tells us that we should not show the subsidiaries, or we should not show the subsidiaries, the subsidiary company's share capital in our consolidated statement of financial position. So that subsidiary share, ordinary share capital, we are now going to take it to. We are taking it here. So look at where we are taking it to. How much is it? We'll take it to
150,000.
150,000. So we are taking it to net assets of. This is where we are taking it. So when we are solving question, all our figures, we must know where it is going to. That is the secret of group account.
Okay.
Every item they give you in your question, you must know, where am I taking this one to? Where is this one going to? Where is this one going to? I must know. So what's the next item
Share
in
premium.
our question? Share premium, Abby. Okay.
Yes.
Share premium. How much is our share premium? 50,000. Please, let's remember, parent only. 50,000 naira. How much is for the subsidiary company? The subsidiary company does not have share premium, Abby. Right?
No, it doesn't. Yes.
Yes. So if we want to disturb ourselves, but we don't need to disturb ourselves, let's just leave it. Let's move to the next one. What's the next item? Retain earnings,
We
Abi.
have retained earnings. Yes.
So we have retained earnings.
Subject to working.
How much the retained earnings of parent company?
203, 400. 203,400.
Okay. So now there is an assumption. Assumption is that once a subsidiary, when the parent company acquire a subsidiary, I said it that it will gain control. The parent company is going to acquire control. And what is control? Control is a who is trying to say something here. Please let's continue. So for you to, when you acquire control, when you take over your subsidiary, it is assumed that you are going to direct the affairs of the subsidiary and you are going to obtain economic benefits from the subsidiary. So probably profit. When the subsidiary have profit, you are going to have a share of profit, and that share of profit is going to your retained earnings.
Oh,
So, and that's the reason why we are not taking the parent company retained earnings. We are not taking it here. We are going to take it to our working note 4. Is it working note 5? Sorry. So parent company retained earnings is going to our working note 5. So how much is the figure? Please give me the figure.
203,400.
The parent company retained earnings, you are just going to take it here. 203
400.
400. So that's it. Now, subsidiaries retained earnings is not coming to our consolidated retained earnings. It's coming to, look at where it is coming. But now there is an issue here. Please let's take note. For the people that have done group account for a very long period of time. So look at it. We have two dates here. We have DOC, we have DOA, and we have post acquisition. DOC is date of consolidation. DOA is date of acquisition. So you must be very careful. Look at the question. They gave us the retained earnings as our DOC because that is the date that asks us to prepare our financial statement, our consolidated financial. How much is the figure? Retained earnings of the parent. So you're not going to look at it. Am I taking it to DOA or DOC? So if you look at it very well, you agree with me that we are taking it to DOC. Why? Because they gave us date. That balance sheet has a date. And that date is the consolidation date. So we are taking the retained earnings of the subsidiary to DOC. Why did we take ordinary shares to DOA and DOC? It's because ordinary shares, when you have ordinary shares, when the company was set up, ordinary share will remain the same. It can only increase. And when they give us additional information that additional shares have been purchased, and we are going to discuss about that in a piecemeal. There's a topic that we are going to treat, piecemeal acquisition. When a subsidiary is acquired in piecemeal, first and foremost, you buy 40%, you now buy additional 20, you now gain control. So, but let's go. We have a long way to do. Let's go. General reserve. What is the general reserve of the parent company? General reserve of the parent company. How much is it?
105,600.
So it's coming to our working note 6. Can you see? 105,000.
600. 600.
600, Abby. Thank you.
105, 600.
Okay, 105, 600. So we are going to come to our financial statement here. We have general reserve here. We have general reserve. So you are going to put your working note 6 here. So whatever you get in your working note 6, you are bringing it here. So apart from that, what's our next item? Now we have our liability. But first and
Okay.
foremost, you must leave 2 lines. If you leave 2 lines, then you introduce your NCI.
Yes. Let's see. I want to sleep. Oh,
So what's the working note we are going to find our work NCI?
7.
Working note
number
what? Is it 7
7.
or it's not 7? No,
Working out two.
that's our working note 4.
It's 4.
Our working note 4. That's our NCI. So not working note 7. So we are going to put our NCI here. Then after our NCI, we will now introduce our we introduce our non-current asset. Sorry, non-current liability. So what's our non-current liability? So what's the figure for non-current liability? They give us 10% loan notes, right? 10% loan notes. Now they gave us, and remember our principle. Please, let's remember our principle. All the liability of the parent and subsidiary must be merged together. Must be merged together. So we continue our, if you can remember, if you get the trick now, it is only the equity we are not going to merge together. All the assets will be merged together, then all the liability will be merged together. Let's leave one line and let's introduce our current liability. Let's move our current liability. So what are the items in our current liability? I wish someone can help me log into the YouTube to help me check if my screen is very old, so that, because so many people usually complain to me that they are not seeing on YouTube, those streaming on YouTube.
Your screen is bold there, actually. See, but just
Okay,
that
It's very
it's
good.
not
It's good.
painting. Here is bright. I don't know. Maybe it's my settings.
The screen is very okay now.
uh,
Still very clear.
but my screen is good, right?
Yes, it's bold.
Very good, sir.
Yes.
Okay,
Very good. I'm bold
that's
enough.
there is a setting for you to increase the quality, but it's going to consume a lot of data. So trade payables, we have bank overdrafts, um
Trade payable is 96,300.
96,300 Abi. Okay,
Yes, sir.
thank you for that. um then our bank overdraft is only parent 4,200. I think my phone. Bill payable, bill payable, parent company is 0, then the subsidiary is 40,000. Why the last is due to food PLC. So due to food PLC is 0 plus 12,000. So we are not going to close up. We are just going to leave it like that. So we can now sum up now. Total equity and Okay, liabilities. So we can use this now. So now we are done with this, please. And when we are solving our question, this is the approach we are going to be using. This is the approach we are going to be using throughout. In fact, our consolidated cash flow is what we are going to be using, and it will make work faster. So now let's move to our additional information. Now let's move to our additional information. So someone can help me with the additional. Okay, let's follow it up. I just want to concentrate on my screen. So let me see. Someone said he can't hear anything. Are you sure you can't hear anything? I'm not sure.
Can hear you, sir. Right on.
People can hear me here. I don't know where.
I can hear you clearly. I can hear you clearly.
We can hear you clearly.
I can hear you clearly.
So tell
So
some
now
person to
let's
join.
continue. Now we are moving to our additional information now. Can you people now see my screen now, Abby?
You can see.
Yes,
You
but
are
you are,
seeing the
you are
question
seeing
now.
no. You are seeing another
What am I
thing.
presenting? What is on my screen?
Depreciation of over depreciation.
Termination
Termination
of
of
over depreciation.
depreciation arising fair value.
You can increase the screen, please.
Okay. Yes, I'm going to increase it. Sorry. I'm going to increase it. Okay, sorry.
If I join in, I share.
So can people see the question now?
Yes, Food PLC acquired loan. It
Okay.
has gone out. It has
Yeah, let's
gone out.
continue. Oh yeah, additional information one. Food PLC acquired 480 million shares in 2 years ago when the balances of the retained earnings and the general reserve were 60,000 and 48,000 respectively. So now we are told that Food PLC acquired 480 million shares. So first and foremost, we need to know the percentage of control. What is the percentage of control? We must determine it, and that's what this additional information one is telling us. Additional information one is telling us that, okay, percentage of control, what is it? So let's determine our percentage of control in this our relevant workings. So can people see my screen?
No.
Can
Yes,
people see
sir.
my screen? Let me check my screen again. What is my screen displaying?
Additional information. You can see it now.
Okay, let me go back to my Excel now. Don't worry. Let me go back to my Excel so that it will be very easy. So now, people can see my screen now. Our workings one is percentage of control. We need to determine the percentage of control. And this is the formula. To determine your parent company percentage of control, the acquired by parent company divided by total shares of subsidiary company times 100%. So how much was the shares acquired by parent company? What the total shares? They told us it's not 480 million.
480.
480.
Okay. 480 million. Let's hang the thousand. So let's hold it like this. 480 divided by what is the total shares of subsidiary? The total shares
600,000.
of
600,000.
So now let's go back to our balance sheet. What is the ordinary share capital of the subsidiary? Please
150
let's
million.
check ordinary share capital of the subsidiary.
150 million.
150,000.
So now this is the first thing I want everybody to take note. The ordinary share capital in our balance sheet, that is the share capital. That is not the unit of shares. And the formula says that we should determine the total shares, the total unit of shares, the total unit of shares, not in value, the total unit of shares. So now for us to get that, what is the unit of shares? What is the nominal price of subsidiary shares in this question?
25 kobo.
Please, if anybody is lost, please let me know the nominal value of shares for the subsidiary company.
I'm lost. Oh.
Huh?
I'm lost.
Okay, I know this is where people will get lost. Now, for you to determine the percentage of control, there is a formula. This is the formula. The total shares of the parent company, the total shares acquired by the parent company. I'm going to give you this Excel sheet. So let me write it in full. This is the formula. The total shares acquired by the parent company divided by total unit of shares of the subsidiary company. So in this question, they did not give us the unit of shares of subsidiary. We need to determine it. And how are you going to determine it? You go back to your balance sheet. What is the ordinary share capital of the subsidiary? It's 150 million. So 150 million divided by the nominal share of subsidiary. How much is a share in subsidiary? So you now go and check your additional information 8. They gave us a question, a clip in additional information 8. So what is now? Go and check the additional information 8. You see that it is 25 kobo. So you divide it by 0.25. Can you see? Multiply by 100%. Please help me press calculator. What did you give us?
What are we dividing by 0.25?
150. 150. Go to your balance sheet. Go and check your ordinary share capital of subsidiary. How much is it? 150. It is there. Go and check. Yes, you now divide it by 25 kobo. You divide it by 25 kobo. That is a unit share, and that is a problem to face if you not for you to determine this percentage of control. Once you can understand this, you are fine. So if you help me press calculator, who is helping me press calculator? What do you
600,000.
divided by 100%? We are going to get what is our
80%.
percentage of control? 600,000. Okay.
80%.
Let's break it down. Let's break it down so that divided by 600,000 times 100%. So our parent company percentage of control is how much?
50%.
How many percent? How much?
80%.
80%,
Huh?
sir.
80%.
80%, Abby?
Yes, sir.
Yes, sir.
Okay. So our percentage of control is 80%. So I want to explain to everybody that this 80%, you are not going to get any mark for it too. In case you don't know, ICA is not going to give you any mark for it. The only mark you are going to get is this group structure, this 80% here. So where I'm going is that all those relevant working, you are not going to earn any mark there. You are not going to earn any mark in that in this relevant workings. The only place you are going to get mark is this place. So 80% is our cost of is our percentage of control. Then when did the parent company acquire the subsidiary? 2 years ago, Abi. That is 1st of August. Is it 1st of August or 1st of October?
First of October. First of
First of
October.
October.
Is it 1st of August?
1st of October.
1st of October. What?
2018.
1st of October 2018. 2018.
You know, they told us that it is 2 years ago.
That'll be 2018.
Yes, 2018. So that is the date of acquisition. So with this now, we have earned a maybe 2 mark or let's say 1 mark. So, but this calculation we did, you are not earning mark for it too, because it's very simple. It's very, very simple. So all the mark you are going to earn is this place. You are not earning mark in relevant workings. However, if you do not get your workings correctly, you are not going to get it. So the two is interwoven. So now let's move on. What's the additional information to? Let's move on, please. Additional information 2. Oh, sorry. Before we move on, what is the general reserve as a DOC? We didn't capture that one. General reserve for subsidiary.
48,000. 48 million.
General reserve.
No, 64,600.
Yeah,
for subsidiary.
That's DOC. So in
64,600.
additional information, in our additional information, please, everybody, let's be focused. They told us something. They said Food PLC acquired so shares 2 years ago when the retained earnings were 60,000 and 48,000 respectively. So that is your figure as a DOA. So the retained earnings and general reserve as a DOA is going to be given in your additional information at all time. Please, let's take notes. The retained earnings as a DOA will be given in your additional information at all time, majority of the time, or in the beginning of the question. It will not be given in your balance sheet. It is very rare. In a rare situation, that's when you are going to see general reserve as a DOA or retained earnings as a DOA in your balance sheet. In a very rare situation, I don't think it is very possible. But I've seen one question like that. That they just indicated in the date. So that's it. Let's take note again. So additional information 2. Let's move on. Additional information 2. We are done with additional information 1. So additional information 2. They told us that the fair value of NCI in EBA Limited as a date of acquisition is 158 million. So that information, fair value of NCI. So this, first and foremost, I gave you a note last week when we are discussing about NCI, the concept of NCI. I said for you to know a good structure, that in some question, no examiner, and that's what happened in this question. No examiner have the time to tell you that it is the group structure to measure NCI at fair value or at net asset or at identifiable asset. Examiner will not give you that. You are the one that will sit down and think, is it net asset or is it as fair value? Which method am I using to value my NCI? If you look at this question now, nobody is telling you that. If you go and check all the additional information, you will not see that it is the good policy to value the NCI at fair value or to value at, you are the one that you use to, and that's the reason why I gave you that note last week. So if you look at this question now, they told us that the fair value of the NCI as a date of acquisition is 158 million. So they already told you indirectly that NCI is valued at DOA at fair value. So that value, you are going to bring it here. You are bringing that value here. This is where you are going to use it. NCI is at DOA. We are giving expressly. How much is it? 158. Sorry. 158 million. So now the cost of acquisition by the parent company, they gave us in the question, right? They gave us in the additional information. Parent company cost of acquisition. They gave us. How much is it? Please, who is helping class to check the additional information? It's not, sorry, it's not in the additional information. In the balance sheet, they gave us the cost of acquisition. How much?
220,000.
200 and
20.
220,000. Okay, thank you. So now that cost of acquisition, this is what I now usually tell people. For it to be very easy, go back to your balance sheet and take it out here. Take that 220, take it out from here. You know why? I will tell you the reason why. Please, I will advise you, use this approach. Do you know the reason why? There are some questions, technical questions, where the investment in subsidiary will be 330,000. Example, let's say 300,000. They will now tell you in the additional information that parent company acquired subsidiary Eba Limited for 250,000. You know it was 300,000 you saw in the balance sheet. They will now tell you that 250,000 was used to acquire Eba. And if you look at it, it will remain 50,000, right? So that 50,000 is other investments. It is other investment. So please, let's take notes. In every question, when you are dealing with your balance sheet, put it here, 220,000. Then immediately you are taking it to your goodwill calculation, then deduct it back. So if you say 220,000 plus 0 minus 220,000, what is it going to give you? It's going to give you 0 here. So here will be 0. So investment in subsidiary is 0. Why? Because you must compare your investment in subsidiary and the net asset of the subsidiary to determine your goodwill. So at all time, please always do it like this. When you are emptying your balance sheet, pick it 220 plus 0. Then when you are taking it to your working note 3, deduct it immediately so that this 0. It is very, very important. Hope everybody understand what I'm saying. Although when we are solving questions, I'm going to be talking about it when you are solving questions. But so many people usually make mistake here. There are some questions, investment with subsidiary will be higher than the amount the parent company purchased the subsidiary. So if you are not very, very careful, you will get it wrong there. And this is the best approach. Just plus it, then minus it, then your answer will be 0. Then if it is higher, then you get a balance here. So let's do it like that. So please, let's continue. Let's continue. So additional information 3. We are moving to additional information 3. Please, let's move to additional information 3. They told us that what? Additional information 3. During the year, good costing 80 million naira to Food PLC was transferred to EBA. So parent company transfer what? Transfer goods to subsidiary company at the cost of what? 80 million. Now it is the it is the policy of the group for the Food PLC to transfer goods at a cost plus of 25%. So what is cost plus? We are going to another place. To cut the long story short, cost plus means markup. When you are selling goods to retailers, when you have your goods, you bought a material for 5,000 naira. Of course, you are going to sell at a profit. So when you add your profit to that your cost, it is called markup. It is called markup when you add your profit to your cost. So if you are writing notes, you can write it down. When your profit is expressed as a percentage to your cost, it is called markup. But when your profit is expressed as a percentage to sales or revenue, it is called margin. So you'll be hearing margin. What our margin? What's our markup? So don't get it twisted. It is very simple. When your profit is expressed as a percentage to cost, it is called markup or cost plus. But when your profit is expressed as a percentage to your sales or your revenue, it is called margin. So now, this question is talking about unrealized profit. It's talking about unrealized profit. I said it last week that when parent is selling goods to the subsidiary or subsidiary is selling to parent, it is assumed that they are selling to each other. And any profit that arises, it is called unrealized profit. It is only goods sold to outsiders. That's when the profit is realized. But when they are selling to themselves, it is unrealized. Please, let's take note. And according to the principle of group account, in line with IFRS 10, the requirement is that unrealized profit should be eliminated. Intergroup transaction should be eliminated. So that's the principle. So, and I said it, we are going to be following principle. So now we are going to calculate our unrealized profit. So people, let's move to my screen, and that's my relevant workings 2. My relevant workings 2, unrealized profit, calculation of unrealized profit. To short it, they call it URP. So what's the formula for calculating unrealized profit? It's called margin times value of unsold goods. That is your formula. That is your formula. The formula for calculating your unrealized profit is margin times value of unsold goods. Please don't change this formula if you don't want problem. No. Just leave it like that. No matter how the question comes, just leave your answer, your formula like this. What's our margin? In the question, you now check, did they give us margin? No, they did not give us margin. They gave us markup. They gave us cost plus. So what are you going to do? You convert your markup to margin. That's the first step. You convert your markup to margin. How much was the cost plus they gave us in the question? They gave us cost plus or markup, anyone. Don't be intimidated. They can call it any name. Let them use any name. They are the same thing. So how much is it? They gave us a cost plus of what?
25%.
25%. So they give us a 25%. So now we are now going to convert to margin. we are going to convert to margin. So when we convert to margin, because the formula is telling us that we should do what? We should calculate the formula is margin times value of unsold goods. Value of unsold. So let's hold it like that. Now, the unsold goods, how much is it? They gave us, right? How much is the value of unsold goods?
80
80
million.
million. I can remember they gave us 80 million. Now, there's now problem in this question that we need to, I said it that our formula is margin times value of unsold goods, but they gave us markup, Abi. Now, when you now look at it, the value of unsold goods, did they give us? They give us the cost of unsold goods. They did not give us the value of unsold goods. So, and that's the reason why you have to be very, very careful. I can examine that they are badu. They can twist your head. The formula says margin times value of unsold goods. Margin times value of unsold goods. So we can solve this question in so many ways. But to make the question very, very easy, they give us the cost of the unsold goods. So since they give us the cost of the unsold goods, so we can calculate it like this. I think we are going to calculate it in two ways. So that if there is another question, they give us cost of the unsold goods. So how much is the cost of the unsold goods? 80,000. They give us costs. They did not give us the value. That means the selling price. So it's either we convert these costs, we convert it to value. If we convert it to value, then we now change our cost plus or markup to margin again. And that is a waste of time. That is a waste of time. So, and that's the reason why we are not going to convert our markup to margin. Is there still time? I'm supposed to do this thing in two ways, but let's do it like this. To get our URP now, let me insert a line here.
Sorry, sir.
Okay.
Sorry, sir. I don't know if it's. They said a quarter of these goods have been sold by Eva at the early year. At the year end.
Yes.
So
now they told us that
is
a quarter. Thank you very much. I'm still coming there. Yes, I got you. They told us that a quarter of the goods has been sold. So which one is unsold? Now, this is the cost of the sold. This is the cost of the goods. Cost of the, let me call it cost of the total goods. Let me use this English. So, how much was sold? Cost of unsold will be 3/4. Since 1/4 has been sold, that means 3/4 will be unsold. That's just the logic. They told us that 1/4 has been sold. So the cost of the unsold will be 3/4. So 3/4 of 80,000. How much?
60,000.
I think that's 60,000, right? I think that's 60,000. Yes. That's 60,000. So we cannot calculate our URP. Our URP is our markup, our cost plus. Let me use the formula in case when you are solving it on your own, you can remember. Our cost plus times cost of unsold goods. So our URP will be 25% multiplied by 60,000. And what is it going to give us?
15,000.
Our URP will be
15,000.
15,000, right?
Yeah.
Okay.
Is it 15,000?
15,
Yes,
15.
Yes,
15,000.
15,000.
Okay, I got it. Okay, thank you. So our URP is 15,000. So there is an adjustment. So this 15,000 is going to affect something. So the adjustment is that, let me put the adjustment here so that we can get it. Adjustments. Less 15K from the value of unsold goods, which is the inventory, and profits. That means retained earnings of the seller. Who is the seller? Who is the
The
seller?
parents company.
Parent company.
So that's the adjustment. That's the adjustment. So we can go to our solution now. So we are going to less 15,000 here.
Sorry, question, sir, before we go further. I have a question. So according to that formula, you said it is margin multiplied by the unsold
Yes.
goods. So, and I was thinking that what they gave us was markup. I was thinking
Exactly.
we wanted converting from markup to margin.
That was what I was explaining. Yes. Sorry, give me a few minutes. I need to. I'm coming. Sorry, I said I'm coming. Sorry. I'm back. Actually, I can't hear. I don't know. I can't hear what you guys are saying at all. So I quickly went to get my AirPods. So that's it. So now let me quickly address this. The question you made mention, look at the question here. This is our formula. Margin times value of unsold goods. That means this value of unsold goods is the selling price of the unsold goods. But in this question, you must be very careful. They gave you markup and they gave you cost of the goods. They did not give you the value. They did not give you the selling price. So if they give you the selling price, you are going to convert this markup, you convert it to margin. Then you now multiply times the 3/4% of this 80,000. But in this question, they give you the cost of that goods and they give you markup. And what did I call markup? Markup is when your profit is expressed as a percentage to your cost. So markup and cost are together. So, and that was what they gave in this question. They gave you both of them. It's no need for you to convert. So I'm very sure when we solve next question, when we solve foreign subsidiary, sorry, I said foreign subsidiary, when we solve fellow subsidiary next week, I'm going to find a question that will have margin and value of unsold goods so that I will now explain it better. I can solve this question, I can change it, I can convert this markup to margin, then I will convert this total goods, I will convert it to value. is selling price, they will get the same answer. But it is a waste of
Ibukolu,
time.
mute your mic.
Please mute yourself, Mr. Ibukunla. Okay, thank you. So we don't have time. Our time is good. Look at it now, 10:30. So, and that's the reason why I don't want to waste most of it. Don't worry. We are going to solve foreign subsidiary next week, and I promise I'm going to find a question like that so that we will settle it. Don't worry. You will be fine. But this question, they gave you markup and they give you total cost. So that's why we multiply it together. That's why we are not converting. So please, let's take it like that.
All right. Please, sir, good evening. Sorry
All
to
right.
cut in. Please, I joined late. I don't know the diet we are solving, please.
Okay. I will send it. I've sent the question to your group. I've sent the question to your group, and I'll find the diet. I'll send it. Yes, don't worry. I'll send it.
All right.
I
Thank
can
you, sir.
see a lot of questions and a lot of answers raising. Please let us go very fast too before I start taking questions. Or you can use the chat room. Okay, use the chat room. If you have any question, just type it to the chat room so that I'm not going to. Our time is going. So you can send your question to the chat box so that we can continue to move. So let's move on. Our working note 2 has been fixed. Okay, sorry, we cleared one leg. We deducted our 15K from inventory. But what about our retained earnings? The retained earnings of parent company. I don't think we have.
That'll be a consolidated retaining.
Retained earnings of the parent company. Retained earnings of the parent company. How much is it? 15K, Abi. So which additional information is that? Sorry, additional information. This is where we are going. Sorry, this is where we are going. The adjustment is that unrealized profits. We must, and that's what I was telling you last week, that any additional information you work, it will affect two places. It will affect the asset side and it affect the liability and equity side. So we deducted 15K from our inventory and we will deduct 15K from our retained earnings too. So there is no way your account will not be balanced. But please, let's take note too. Please don't go and be forming King Kong don't be forming a freeway in the exam hall. It's not compulsory your question will be balanced. So not compulsory. It's not compulsory. But I shall explain to you how you are going to do your question. Don't go and be saying, my question is not balanced. I'll do all what it takes to make sure my question is balanced. So unrealized profits on inventory. We are done with that. So we can move on. So what's the next additional information? The next additional information is working note 4. They said part of the bill receivable has been discounted by Food PLC. Now, if you go back to our balance sheet, we have a bill receivable, 30 million. So that bill receivable, they now told us that it has been discounted by the parent company. So, but if you check your bill payable, if you go to your bill payable, the subsidiary is having a bill payable. So invariably, they are owing themselves. And that is what works. So since this has been discounted, this is what we are just going to do. Bill receivable, we are just going to less 30,000 naira from there. It has been discounted by parent company. Less 30,000 naira from here. Now, let's move to, we are now going to move to our bill payable. So when you less 30,000 naira from here, this one will be 0. There's no time at all. All this one is just consolidation adjustment. Now you come to your bill payable. They are owing each other. This one is owing this one 30 million. Why this one is owing this one 40? So if you deduct 30 from this one, there will be remaining 10 million. So this 10 million is bill payable to outsider. Is bill payable to outsider. So if you deduct the 30, the parent company is expecting 30. Why subsidiary is paying 40. So if you remove 30 from 40, it will remain 10. So that is just the simple adjustment. If we move to additional information 5, they told us that the sum of 8 million transferred by EBA to Food PLC as part payments for indebtedness. Indebtedness was received after the reporting date. This goes to our additional information 4. It is called cash in transit. They call it, sometimes it is cash in transit, sometimes it is bank in transit, sometimes it is goods in transit. What is cash in transit? What is goods in transit? What is check in transit? What they are saying is that parent company is owing subsidiary. Subsidiary is owing parent. Now, subsidiary now sends a money to the parent company that I want to settle my debt to. However, in the question, if you check the additional information, they now told us that what? They told us that it was received after the reporting date. It was received after the reporting date. The 8,000. How did they get the 8,000? It is the difference between this one and this one. This and this. The difference between them. Sorry. This 8,000 is called cash in transit because the parent company did not receive that money till after reporting date. So as at the date of reporting date, he has not received that money. He has not received that money. So that 8 million is called cash in transit. So the adjustment is that, let me just put the adjustment here. You are going to add it to your cash. Or you add it to your cash, or you show it as a line item in your consolidated. But that is a waste of time. Just add it to your cash here. Add it to your cash here. 8,000. It is called cash in transit. Just add it to your cash and bank. So that's about that. They are owing each other money. This one is owing this one 20,000. Why? Sorry. This is where we are going to. This due from EBA and due from EBA and due from Food PLC. You know they are owing each other money. So when they cancel out each other, they will cancel out each other. So when they eventually cancel out each other, the remaining balance will be cash in transit. So what are we going to do? So we are just going to deduct. How can I do this so I will not scatter? How can I do this? Okay, let me do it like this. Let me do it like this. I understand that people that did skill level, we understand what I'm doing. Now, let me deduct the 12,000 here. You know, if I deduct 12,000 here, it will remain 8,000, right? So let the 8,000 come here. So although there are so many ways, just like my lecturer used to say, there are so many ways to die. God will not let us die now. Me, I'm just saying it that 8,000, let's put it here. Now, 12,000 now. That one has paid 12,000. So let's deduct the 12,000 here. So if you deduct 12,000 here, this one will now be 0. So this one will be 0. Why this one will be 8? So if you look at the two now, this one will be 8,000, that one will be 0. And that 8,000 is called cash in transit. So, and that's the reason why I added it to my cash here. But I know that so many people might be confused that how did I add 8,000 here? So I can just put it here. Let me put it in brackets here. Let me call it cash in transit, so that people will know that it is cash in, that 8,000 is cash in transit. So there are so many ways to solve problem. So sometimes I can add the 8,000 to my cash in transit. I'll now delete this. I'll now delete this due to EBA and due to inyo or due to food. So, but there are so many ways to tackle so many problems. So that one is gone. I want us to be very fast so that people can ask questions. But let's see. Additional information 6. They told us that an impairment test revealed a loss of 16 million on the goodwill arising on acquisition. Impairment. So in our working notes, in our working note 3, we are calculating our goodwill, right? So if you calculate our goodwill, this is our purchase consideration. Parent company cost of acquisition plus NCI value at DOA, you get to your purchase consideration less net assets of subsidiary. Net assets. Let me write it in full. Net assets of subsidiary as a DOA. However, we are not done with our additional information. They now told us that goodwill is going to impair. So we are now going to add our impairment here. Impairment. How much is it? How much is our impairment? People have slept too. Hope I'm not the only one here.
16,000.
Okay. Okay, people are still with me. 16,000. So they asked us to deduct our impairment. So our impairment of 16,000 has 2 adjustments. We deduct from our goodwill, even though we have not gotten our goodwill. Just post it like that. So I want to ask a question now. According to the group policy, what is it? Are we using fair value to value our NCI or net asset method?
Fair value.
Fair value.
Fair value.
Fair value. So
Fair value method.
okay. So now when we are valuing our NCI at fair value, you should remember that impairment loss will be shared between parents and subsidiary. I said it last week. Please don't forget. Whenever you see impairment loss, it is both of them that will face it. Impairment loss will be deducted from both parents and subsidiary. So let's go now. NCI now is going to enjoy share of acquisition. Now is share of impairment. So what's the percentage of subsidiary? 20%, right? Multiplied by share of impairment, 60,000. So how much is it? Egole, I think it is 3,200. So that's the share. So the parent company will collect its share. Sorry, the NCI share, not parents. NCI share. Now, the parent will also collect his own share too. They will enjoy profit together, and they will also suffer loss together. So I can delete this. I'm using Excel. I can copy and paste this. So I'll just change this to parent company. I'll change it to Food PLC. Food PLC share of impairment. This is 80%. Remember, the parent is 80%, right? Yes. So, no, let me return it back to its state. I think I can wrap the text. Let me wrap the text. Let me wrap it. Okay. So, LCI 20%, then parent company 80%. So, I can wrap this text too. So, how much is 80% of 16,000? I think that if I can deduct 3,002 from 16,000, I think it is
12,800.
12,800. Thank you. So this is settled now. So now we are done with additional information. Additional information 5, right? Yes, we are done with it. So the last additional information. I remember we have tackled additional information 8. We have picked the 50 kobo per share. Do we need it? No. We only need the subsidiaries kobo. So all the additional information left is additional information 7. So let's tackle it so that we can take few questions. Then everybody can go and eat. I know everybody have eaten. It's only me that have not eaten. So don't worry. Some people are even eating as they are taking lecture. As they are receiving lecture, people are eating. Okay, let's continue. So additional information 7 is calculation of depreciation. Now, they told us in the question that the carrying amount of net asset of EBA is 20% higher, more than the fair value. So is that an impairment? Is that a fair value gain or fair value loss? I've already written it here. Which question am I asking you? Sorry, that's a fair value loss. The carrying amount is higher than the fair value. So if the fair value is higher than the carrying amount, that's fair value gain. So they ask us to calculate the depreciation arising on fair value loss, and that is over depreciation. That is over depreciation. So to calculate our over depreciation, this is our formula. Our fair value loss, which is 20 million. Remember, we have anchored 1,000 multiplied by the depreciation rate. They gave us 15%, right? And multiplied by number of years from DOA to DOC. So what is the total number of years from DOA to DOC? From date of acquisition to date of consolidation, what's the percentage? What's the total number of years? People have slept too.
2 years.
2 years. Okay, thank you. Okay. 2 years. Let me increase my font little for the people joining me from for people streaming on YouTube. Oh yeah. So what's our depreciation?
15%.
I mean the total figure me
6 million.
6,000.
6,000. Thank you. So our depreciation is 6,000. So I think we are done. Let's just balance up so that we can take questions. So there's an adjustment here. Let me put the adjustment here. Adjustment. Now, the fair value loss. Adjustment 1. Let me see the adjustment 1. Why is this very long like this? It is too long. It's too long. My adjustment 1 for my fair value loss. How much is my fair value loss? Of 20 million. No, fair value loss first. Fair value loss of 20 million. 20M. So my adjustment will be less 20 million from PPE, which is non-current assets. According to the question, we don't have PPE, we have non-current assets. And we now less 20 million from non-current assets and net assets of subsidiary. At DOA under working notes 2. That's the adjustment number 1. We will less 20 million. So we will come to our solution here. We go, we deduct, and please don't sleep on this working. So immediately your assets, you adjust something from your asset side and you adjust something from your liability side. Look at the liability side now. What are we adjusting? And that's why I said group account is somehow, you just need to recognize, where am I adjusting? Where am I adjusting? Where am I adjusting? Now, where I'm adjusting is where? Is the liability side, which is this place. They said I should deduct it as a DOA. Look at it here. Fair value loss. So I'll deduct as a DOA, not DOC. DOA 20,000. Can you see? They say I should less it at me. So I need to put minus at the front. Excel have started to. Let me use bracket so that people seeing it will not go and write 20 now. Let me use it in bracket. Now, can you see now? I've tackled the first adjustment. Now I'll move to second adjustment. So what's my second adjustment? My depreciation itself. My depreciation. Depreciation of how much? How much is my depreciation?
6,000.
My depreciation of 6 million. So my adjustment will be add. It will be opposite. Please, let's take note. This is a fair value gain. We are going to solve so many questions. If it is a fair value gain, we add to non-current assets and add to net asset as a DOA under working note 2. Then depreciation will now be less. But here, it is a fair value loss. Fair value loss. Let me put loss here. Fair value loss of 20 million. With less from non-current assets, less from net asset of subsidiary as a DOA. But here, depreciation of 6 million, we add to what? We add to non-current assets and we add to net asset as a DOA. So I think I can copy and paste as a DOA only. That's where I'm supposed to. That's where we are going to go. So DOA and DOC. That is where group account YY come from. This one, let me now copy this. I think I can copy it. So this one will be add. I don't know what Excel is doing for me here. Add 6 million to look at this. Instead of me to type it, I will have done. Add 6 million to non-current assets, then net asset as a DOA only. Please, let's take note though. This is where group account YY comes from. That 20 million, you less from non-current assets, then less from net assets as a DOA and DOC. That is what is happening here. This place. Let me copy and paste it. I don't have time. Now, depreciation now. Let me call it over depreciation. Over depreciation. On what? On property. We now add 6,000 to DOA only. DOA only. DOA only. So I can use Excel to sum up all my figures. Let me use, where is my odds here? Oh my God, odds. Where is odds here? Odds equal to, give me the figure. So this is my net asset as a DOA. This is my net asset as a DOA. Then here, I can also use odds equal to give me the total figure. And this is my net asset as a DOC. So my post acquisition now, please, people should help me with this figure. People should help me with this figure. B minus A. B.
Ordinary share still okay. Ordinary share 300,000.
We are not B minus A.
Zero.
Ordinary share will be dash. Please, let's take note to Ejo. Where my Kuba Ejo.
28,000.
28,500.
28,500.
This one will be 28,500. Okay.
16,006.
16,600. Why this one will be 0, right?
0. Yeah.
Then this one will be minus
Minus
6,000.
6.
Because it is B minus A. B
Yeah.
minus A. Please don't let us sleep. Let's wake up.
33,000.
Calculation is 39,100. So now I can calculate my net asset as a DOA. Can you see now? So how much is it? 244,000. Remember, it is minus. Excel have started. So how much is my goodwill? My goodwill as at acquisition is, sorry.
134.
How much is it?
134.
4,000.
134. Are we correct? Our
You're
net
correct.
asset is at DOA. Okay. Our net asset is at DOA will change. Yes, don't worry. Let's continue. So, what is our goodwill? This is goodwill at acquisition. At
You less
acquisition.
impairment loss. That's true.
Then goodwill
108.
108, right?
118.
Sorry, 4
Okay. Battery low. Can we take question? I don't think so. Eh? Our baby is disturbing us. So goodwill as an acquisition, we can take it like that. Our goodwill. So please, you can help me with the figure so that we can be very fast. We are done. And my battery is very low. Oh, shit. And I cannot stand up. So I think we are just going to, okay, what's our post-acquisition? Let's calculate our post-acquisition profit. NCI value at DOA. This one is copy and paste. 158,000.
158 is there.
MPI share of acquisition. 20%, right? 20%.
Of 31,391. 900.
That's 1,900, yes.
At 900. That's 900.
NCI share of post-acquisition.
7,820.
Yes, I'm correct, right?
7,820.
Okay. So I think Excel is making us to be fast. So I'm using the formula. So our consolidated retained earnings now
80% of 80% of that 1,900.
Exactly. So 80% of retained earnings only. Retained earnings only.
Okay, return. Sorry. Okay, that is 25,500, 28,500.
Yes, 28,500.
22,800. 22,800.
500.
22,800.
Excel is telling me
Enter.
I'm not
No,
percentage.
bracket it. Bracket it. Oh, okay. Enter.
Please just give me the figure. I don't have time.
22,800.
How much is
22,800.
80% of 28,500.
2,800.
Okay, 2,800.
Yes.
Now, consolidated general reserve. I think we have calculated all the figures.
Yes.
So the share of 80% of the general reserve, post-acquisition general reserve, 16,600. 80% of 16,600.
Okay.
Just give me the figure.
16,600 is 13,280. 13,280.
Okay, 13.
Yes, 280. Then
So
you add
use 105,600.
I think Eze can help us with that one. That one
One
will
one
be
eight eight zero. 118880.
yes, we are correct. So
Yes.
now let me I'll send this again. So we can take question now. Let me balance up. So how much is it? Figure. How much is this figure?
Let me check.
Ah, it's only
536.
it's only one person that is giving us figure. The rest are sweat.
536. 536. 258. 258. 536 plus 258 minus 20. 774.
The first one is
774.
7
774,000.
774,000.
Yes.
Okay. What about the
Then
event?
this one, let me check.
Inventory is
88.
165,500.
88.5. 88.5.
Inventory is how much?
165,
165,500.
500.
Ah, shit. I've made
Yes.
a small mistake here that our account will not balance. That depreciation, I did not bring it here. Remember our depreciation. Our second
Yeah.
leg is coming here.
Yeah.
Yes.
You have to add it.
So if I add it,
You
what will this one give me?
so you give us
780,000.
780.
It will be
780.
780,000.
780,000, yes.
Yeah.
Okay, it will be 780,000. Okay. That one has been corrected. So my
Inventory is
inventory
165,500.
165,500.
165,500. Then my trade and other receivable
Plus
145, 200.
145, Abi.
Yes,
145,
145,
Yes.
200.
200. Okay. The receivable is here.
145,200.
Cash and
My
bank,
cash and bank is how much?
57,800.
25.
57,800. So
57,800.
now let's move ahead. So we are linking this now. We can link this from retained earnings. What's our retained earnings? These are retained earnings. We can link it. General reserve, we can link it. You don't need to tell me the figure. So this as you can give me the total figure. My NCI, how much is my NCI? Is my NCI correct like this?
Yes.
Okay. Because the way I'm seeing it, I'm scared. 162, one that figure is very funny to me. Like, where is it? Okay, I'll link it. So I can get my total equity here. Okay. Okay.
Increase the length. Okay.
So my total equity is 1 million. Then my total assets is okay. I think we are still small, but I'm very sure it will be balanced. So this one will be 150,000, right? I think
Yeah,
nobody
150.
can answer me, so
150.
I know it. I know this one.
Okay.
So
Do you know this
now
one?
I know this
36.
one too.
143, 200.
I know this bank overdraft too. Nobody should tell me.
Okay. System.
Trade
So
and payable is 143, 200.
143,200. So I think that's all right.
Yeah.
That's all. We don't have any other figure again. So, I think Excel can assist us.
Um,
Okay, our total equity. Hope we didn't miss anything out. Wow, look at us. How much is our retained earnings? Share premium, retained earnings, general reserve, and the likes. So this is, can we see now? How much is this? Uh, 770. Can you see where our mistake come from? Our NCI is, how much is our NCI? Can you see where our mistake came from? This plus this is 929,900.
hey, well, you can't see our screen anymore.
System is off.
Oh,
Oh my God.
oh my God.
Wow,
The
just
color is
surprising.
serious.
Hopefully, I pray it's safe. That is all.
Oh, the
We pray,
recording.
pray.
Enough. Voilà.
Anyway, we can always get it from YouTube.
Can you get the Excel sheet? How do you get the Excel sheet?
You can watch the video on YouTube now.
I mean the Excel sheet.
Oh,
I'm sure you should save it.
Hello, everybody. Hello.
hello, sir.
Okay, I lost my connection because of my laptop. Either I said it, my laptop is almost down. So unfortunately, it's down. But don't worry, the account will be balanced. I'll send the solution to you guys tomorrow morning, or let's say in the evening. I'll send it to you guys. So no problem. I'll send it. So to the people that have questions, you can just send question. And I still take question this night. Uh, but don't worry, I'll send the solution to your. I'll send the solution to your group tomorrow. Our account is balanced. I find where the error came from, so I will send it to you guys. So don't worry. So to the people raising up questions, raising up hands for question, you can send it to my DM. I'll send the Excel tomorrow. So that is it. There's work tomorrow. Please let's go to sleep. So thank you all, everybody.
All right.
Thank you, sir.
All right. Bye
Thank
bye.
you.
Good night. Bye bye.
Good
Good
night.
night, sir.
Good
Bye.
night. Bye. All right. Bye bye. Good night. I'll send the solution to you guys tomorrow morning or tomorrow evening. If I'm not very busy, like tomorrow morning at office. So, but I'll send it at least by evening or night. I'll send it. All right. Bye bye. Good night.
Good night. Thank you, sir.
All right.
Good
Good
night,
night.
sir. Thank you so much.
All right. Good night.